In this video, we're going to talk about the different accounting methods that a corporation can use when it's filing its tax return. So when you initially create a corporation, you're going to get a choice of 3 different accounting methods. And you want to choose carefully, because if you decide to choose your accounting method at some point in the future, it's going to require approval from the IRS. So you can choose from accrual basis accounting, you could choose cash basis accounting, or you could choose a hybrid approach. Now, a hybrid approach is going to incorporate elements of both accrual and cash basis accounting. For example, under a hybrid approach, you might use the accrual-based method for receivables and payables and revenue and so forth, but then the cash basis method of accounting for everything else. Now, most large firms, most large C corporations are going to be using the accrual basis method of accounting for taxes because they have no other choice. There are actually restrictions on which types of corporate taxpayers can use the cash basis or hybrid approaches. So I want to talk about some of those restrictions, and we'll just say that there's a general rule, make it a little easier for you to understand. The general rule is that you have to use the accrual method unless 4 exceptions apply. So one of the exceptions is if you have a personal service corporation. I'm going to make another video specifically on personal service corporations because it's very important. So don't worry so much about the details now. But let's just say, for example, if you're an attorney, if you're a lawyer and you start your own law practice, if you are an accountant and you start your own accounting practice, you might qualify as a personal service corporation. If you are, then you are not obligated to use the accrual method of accounting. If you have a family farm, you are not obligated to use the accrual method. And again, with each of these, there are exceptions and there are details about which type of family farm. Actually, I'm going to refer you to Section 448. Section 448 of the Internal Revenue Code will give you more details about which types of family farms qualify and so forth. But generally speaking, personal service corporation, family farm, or if you have annual gross receipts, so we're talking about your gross revenue, if you have less than $5 million a year, right? So if you're taking in less than $5 million a year in revenue, you also are not bound to use the accrual method. Now, actually, with this $5 million, the IRS is going to go back over a prior 3-year period, and they're going to take the average of those 3 years. They're going to take your average annual gross receipts for those 3 years. If you've only been in business 1 year, then they'll just look at the 1 year. But if basically the idea is if this is a small corporation, then you're not obligated to use accrual method. And then also, if you are an S corporation, right? And remember, this is an election, and I'm going to make a separate video all about S corporations, but it's basically you are electing to be a different type of corporation, and then you are not obligated to use the accrual method. So basically, if you're a personal service corporation, family farm, you have the gross receipts less than $5 million, or you're an S corp, then you have all 3 options available to you, right? You can use the accrual method, the cash basis method, or the hybrid approach. Now, there are other exceptions that apply. For example, if inventory is very material to your income producing operations and so forth, basically if you have a lot of inventory, you might actually be precluded and not able to use the cash basis as well. So I'm just giving you general rules here, but just understand that most large C corporations are going to be forced to use the accrual method. But if you qualify as a family farm or personal service corporation, you have less than $5 million in revenue, or you're an S corp, then you might be able to use cash basis or hybrid accounting as well.